I just want to thank everyone for hopping on today. The topic today is really the NAR lawsuit, agent commissions. How can we protect, help? Our business is truly nowhere without our agent partners, right? Hopefully, you all recognize that. We greatly appreciate it. We probably don't thank you enough, but as a partner, I find most often agents are dealing with the customer before us. So without, your success, we're nowhere. So, the goal of this presentation is really to give back, to share options and ideas to help you expand your business. Our business has been down. It's been a very tough market, low inventory, high interest rates, the lawsuit, a lot of headwinds right now. But I think, as I say to my team, we've been navigating these headwinds for about 2 years, and I do feel a tailwind coming on. I feel lower rates coming on. I think inventory is starting to improve and will continue to improve. So again, today is really the goal is just to help everyone with some ideas to attract more business, retain more of your commission, and provide ideas with regard to that. So again, thanks for hopping on. We do want this to be interactive. I think we're going to have a lot of great material, and we'll leave some time at the end for Q&A. So with that, I'd like to introduce you first to attorney David Eklund. David is with Crowley and Cummings. David's going to chat quickly a little bit about his understanding of the lawsuit and sort of where he thinks things are going. We're not going to go deep into, trials and, tribulations and all this stuff, but just kind of an overview to begin. So with that, David, do you want to hop on?
Sure. Good morning, everybody. I promised I would not talk about complaints and jury instructions. Dave Eklund with Crowley and Cummings. Thanks for having me, by the way, Andrew, James, and Peter. Enjoy doing these things. Do a lot of these seminars with agents, and happy to be here. I want to keep this very high level. As I mentioned in the last seminar I did on this topic, the industry really is evolving. We're really still learning. Nobody really knows where we're going to land with all these settlements. They're still working out the litigation and the settlements. I think what is happening more and more, though, is the conversation about what we need to do to change, how we need to impress upon our clients, meaning the buyers, the value of each of us in the transaction, and specifically the real estate agents. Part of that process is understanding the forms that will be developed, working with your broker owner, potentially your attorneys, along with your broker owner, to be comfortable with the forms, make sure they're compliant with what the DOJ and the settlements require. And also understand what the contents are in terms of explaining value and the contents of those agreements to buyers. From my end, what I'm seeing is some concern among buyer agents about how am I going to do that? What is this form going to say? Am I going to lose business because of this, or end up with smaller commissions? And from my standpoint, I really feel you all are an integral part of this process, necessary. In my humble view. And it's just a matter of explaining that in plain language to buyers. For example, whether or not to do a home inspection, a radon inspection, waiving contingencies. That's the most basic thing in structuring an offer where a real estate agent could be involved and communicate why that's important to have an agent manage that process for the buyer. Waiving lead paint inspection, which is done almost all the time. Suitable housing contingencies. How is a buyer with a listing agent going to draft a suitable housing contingency or a home sale contingency? These are all basic things that hopefully can be easily conveyed to the buyer to impress upon them value. The other piece of this is confidentiality and a fiduciary obligation. I think what gets lost in all the business terms, the commissions, is what exactly is the role of the buyer agent vis-a-vis the buyer. And if you focus on the value that you're providing, the services that you're providing, and the fact that you're a confidant and a fiduciary to do due diligence, keep confidentiality, be on their side of the table, I really feel that we're going to end up not too far off where we are. And that's just sort of my high level view of where we are and where we're going. And Peter, I don't know if you want to drill down on any of that, but that's my high level view of where we're going on this.
Sounds good. Sounds good. Hey, everybody, what's happening? My name is Pete Fakaizen. So I am the sales director for Signature Expanded, a product line at Cross Country Mortgage. So I see some faces that I definitely have known and have worked with before. I am currently a corporate guy now. So this presentation is 100% about the Marquee team. Just wanted to say that, and that, yeah, I've turned over my last 22 years of business to a 30-year-old guy that's running my previous branch in Southern Massachusetts. So great to see a ton of faces here. But yeah, I mean, when it comes to, NAR and what to do, I've been traveling the country, talking with realtors just like this on Zooms. Been visiting multiple different states, getting lots of different insight of what's going on. And I think the real big thing when it comes down to this is, what is the future of your business? How are you going to deal with this? We've got some agents that are sitting there on the couch just kind of waiting for someone to tell them what to do. We have other agents that are being super proactive. We have agents in some markets that have already started advertising and telling sellers, like, why are we paying the buyer's agent? It's really all about to happen. And while things are getting formalized, lawsuits are being paid, this is going to happen. This is definitely going to change the business. It's just a matter of when and where will it affect you. And what our whole point is that here at Cross Country and working with the Marquee team, we're here to set you up for success, using our team to help, create that process for you, right? So a couple things that we talk about is, you really need to become an expert in, number one, the contracts that your company is offering and what your employer's offering at the real estate company you work for. Number two, you need to become an expert in, pitching the buyer's representation and seller's representation almost as two separate things, right? And you've got to come up with your plan and you have to start practicing it, right? So think of yourself as like, someone that wants to become like a top athlete, right? You don't become an NBA player and the top free throw shooter by not shooting free throws every single day, right? You don't become a great real estate agent without practicing what you're doing. So repetition as much as you can, even if it's just getting with another real estate agent in your office and role playing just to understand what are going to be those tough questions when other people are going to start selling against you, right? How are you going to lock down those buyers when they walk into an open house and maybe a real estate agent's advertising buyer's agent, on site 1%, right? Pay 1%. How are you going to negotiate with a seller's agent, rolling your fees and representing your buyer in the best way into that contract? These are all things that you need to start to really put together, because while this date just got delayed to August, you really need to understand what's going to be your format, what's going to be your process, right? McDonald's doesn't make the same hamburger here and in Australia by happenstance, right? It's a process, right? They don't have the same level of service everywhere, just because, that's just the way they do it. It's because they have a written process of how to do it. So you really need to get with your manager, your company leaders, and figure out what's going to be your process to go out there to lock down buyers and sellers. And what we're going to talk about here today is really some of the things that are going to help you create value, separate yourself. Okay. So Cross Country, we are, the largest retail distributed brand in the country, right? We're doing more purchases than any other company out there. And there's a reason. It's just because number one, we have the best loan officers like the Marquee Group. Number two, we're setting you up as a real estate agent and your referral partners to go out there and get more business done. Okay. So today we're going to talk a lot about that. We're also going to talk about, just real quick, the process for pre-approval, right? Which I feel is really important in this marketplace. And I want to use one quick example. Maybe I'll have Andrew elaborate here a little bit on it, but it's like, think about the process now where your buyer is out there, they've got that pre-approval letter, you've had that conversation with them, and you're taking them to a couple of the listings that they like online. But now fast forward to NAR, and you haven't been able to reach that seller's agent, even though you've got a, booking time, but you have no notes or you've no insight as to, now you're driving to this house with your buyer's agent, and you have no idea if that listing is going to have, compensation tied to it or not, right? So if your buyer has a pre-approval, how do you know what your buyer can afford if you haven't spoken to that loan officer before you start driving that client around? And I think there needs to be a change in your process to understand who you're working with. And then more importantly, what expectations are you setting, not only for yourself, for success to get them that home if they love it, but also for them to be able to purchase that home, right? Because if that seller is not offering you compensation, right, how is the buyer going to pay you? How are you going to be able to answer that question if you don't know the person or the bank or the pre-approval, or is that loan officer even working on that Saturday or Sunday that you can pick up the phone and call them to figure out, like, hey, all right, you got pre-approved at X bank. It's a Sunday. We need to make an offer. Your buyer loves this home. That seller's not offering compensation to you. How are you going to get paid? So I think these are all the questions that you really need to start to format in this new era of, do I have a correct process to refer someone up front for a pre-approval? And do I have a process even in place where I'm not bringing anybody out until I know that they are pre-approved and what they can afford, with buyer compensation, or with the seller compensating me, or with the buyer compensating me as a real estate agent, right? Because some people that even have bought homes that are, significantly educated won't be able to figure this out, because the last time they bought the home, right, there was no mention of how the realtor was going to get paid on the buy side, right? So, being proactive rather than being reactive is not only going to be able to save you time, but it also could be saving you a lot of money from wasting your time, right? And I think it's just so important that you build into your process a very strict way of how you're going to operate with buyers, because you don't want to be driving all over the place or blowing up your Saturday, Sunday, Monday night, Tuesday night, Wednesday night, whatever it is, to come to find out that you just spent 6 hours doing all of this, spending time with this buyer, and they can't afford to pay your commission. And your company what happens if your company doesn't even allow you to, cut a commission and maybe work for 1%? I know there's real estate companies out there who won't allow people to do that. So, are you at the right company? So these are all different questions that you really want to work through and figure out. But I can tell you one thing that you're going to learn today is we're going to show you how you can create more value for yourself by a variety of different product options. We're also going to show you that, if you have a team in place that is working 7 days a week, whether it be Andrew or one of his team members, you're going to be able to work at a higher level than everyone else, right? You're going to know if that buyer can afford to pay you, or if they need to get, or if you need to build in a seller concession or get compensation from that seller. So Andrew, do you want to
Yeah, no, I just had a quick thought, Pete. It's all great. I think we have some messages coming through in the chat, and I think sort of when I think about it, in the past, it was sort of assumed, my commission was coming from the seller, right? So sort of as we look at this in a macro level, we think, well, what if the seller isn't paying the buyer's agent? How are we going to get paid? And yes, we're going to cover that. And I think the key to that is, where Pete's starting to allude to is some of these different products we're going to talk about are going to carve out extra money, Pete, so that if the seller isn't paying the buyer, that we have a way to do that in most
Yep.
cases. Is that the case?
Yep, 100%.
Yeah.
Yeah.
So anyway,
So
I'll let you continue, but people were asking about that. So
yeah, so one great thing here about cross country is that, we have multiple different product lines from Fannie Mae, Freddie Mac, State Bond, FHA, VA, jumbo, bridge loans. By the way, one of the cheapest bridge loans in the marketplace. I will attest to that. It's about a point where other companies are multiple points. Okay. Construction loans, home equity lines, business purpose loans, investments, small commercial, land loans, and then what we're going to talk about today, a bunch of non-QM, non-qualified mortgages. So these are basically portfolio in-house loans here across country. We do have options to broker stuff out, but here across country, we are, trailblazing the industry at a growth level that no other mortgage company has seen. And the simple reason is we are doing a lot of education with people like yourselves and referral partners. And that's what's making us 1 out of 42 mortgages here closed in the USA today are cross country and the #1 retail distributed mortgage company. So our whole deal is about the borrower getting the home that they love and helping you get paid. We want to be on your team, right? And we think with all these different options, you're going to be able to differentiate yourself in the marketplace. And when I do these talks across the country, it's like light bulbs start firing off and there's a ton of questions. So what is a non-qualified mortgage? A non-qualified mortgage is a loan that is unique. This is not subprime, okay? But these are options that don't fit that Fannie, Freddie, and jumbo mindset. So to think about it as these aren't stated income, stated assets, no income asset loans like, when back in, sub 2008, these are not risky portfolio loans that are being sent to some obscure bank. We are dealing with basically solutions for self-employed clients. We get a lot of people coming out of COVID still. If you need 2 years tax returns to get a jumbo loan today, right? Or even 1 year's tax returns, you might not have had, your tax return filed as all of you, for 2023, you might be filing in October, like a lot of self-employed people are. How about wealthy clients with unique situations, whether it be a property type, whether it be, family trust income or something like that. People with a lot of assets, real estate investors, right? And we look at each other like, wow, real estate investors in this marketplace, it's so hard to get any buyer under agreement. Well, think about yourself as a real estate agent. Real estate investors are incredible buyers to have. They know what they want. They don't screw around. They usually have money and they act quick. So instead of driving someone around and making 15 offers on 15 different properties, maybe you've, honed your skills to become the investor's realtor. Non-QM deals with a lot of fallout, right? We become what we like to say is the agent hero. So when you have something going awry and you even just need to ask the marquee team a question, hey, listen, my buyer went with this other bank. I don't really understand what's going on, but I've now delayed the commitment for 3 weeks. Get our team engaged, right? Get the team engaged. We're not getting answers. If you're not getting answers, I'm telling you right now, that's not a good deal right now, okay? While it is busy, it's not crazy busy where banks can't get back to you or loan officers can't get back to you in a timely manner, right? Foreign national clients, ITIN clients, clients again with unique scenarios. So we're going to go through a bunch of these different things, but just real quick, the evolution here of non-QM and CCM, our biggest differentiator, I'm not going to go through all this, but The reason what separates us from every other mortgage company is this is a in-house portfolio product. We own this from start to finish. We are not sending it to someone else to make a decision. And why it makes us so unique compared to other companies in the marketplace is that we are what's called securitizing this marketplace after the closing, meaning we are basically lending that money up front. We're putting it in a pool for other large investors to invest in and then servicing it. Okay. So, we've been doing this for 5 years. My previous company, we were doing this for CCM behind the scenes. But what makes us unique is that our guidelines are pretty flexible. And when I mean that, we give exceptions on 35 to 40% of all of our funded volume, meaning that if someone's credit score is just out of the box, we're probably still going to do that loan. If someone needs a 5%, loan to value or debt to income ratio exception, we're most likely going to do that. And you're going to see here some of these different things that, again,
Pete, you know what I appreciate? I'm sorry to interrupt you, but just examples, right? So we had a file about 3 weeks ago that fell out with another lender. It was a $2 million purchase. Client changed jobs in the middle of his loan process. We all tell the client, don't change jobs, don't take out new debt. He changed jobs. He had a base salary, but he had no bonus income yet. No bonus income at all, guys. And we need the bonus income to qualify. He started the job 10 days ago. We got a verification of employment from the employer that says he has the potential to receive bonus income. We cleared that loan to close, Pete, in like 48 hours. The loan's closing today. So we went from an agent, $2 million deal. I think she was getting a 2.5% commission. That deal was on the fritz of getting denied by another lender. I won't name names, but they had the client at 8.5%. They were going to deny the loan because he switched jobs. We cleared that loan to close in, I want to say, 2 or 3 days. We got the rate in the 7s for the client. We said, hey, look, we're going to probably refinance this loan in 6 months with no fees. But this was a portfolio loan. No jumbo investor would have used that bonus income without any receipt of that income on a new job. No one would have done it. And we did the loan, Pete. We said, he's got a good down payment and not a good credit score. It was a jumbo loan with a 640 credit score, everyone. So it wasn't the cleanest file in the world, but he had a good down payment. He had got bonus income in the past. Again, not subprime, but totally saved the day, Pete. It was a $50,000 gross commission to that real estate office on the buy side. That deal would not have closed otherwise.
Yeah. So our goal is to help you understand all the different products that we offer with these programs, everybody. That's so you can create more business in a time where maybe there isn't a lot of inventory or a lot of people out on the street. What we want you to think about is one thing. The reason why I've got this growth chart on here is for one simple thing. The more people that get educated on what can actually be done today compared to what can't be done equals growth in your business and our business, right? And everyone needs more deals these days, right? There's just simply not enough listings. But there is a doubt in that buyer's mind out there that once one lender says you can't do this, or one lender says there's no way they can do this, right? That they can't get something done. And I'm here to tell you that whether it's a wedding singer with 30 1099s, right? The true story, a contractor that does $20 million of business a year, but makes a penny on paper, couldn't believe after going to 10 banks, couldn't get a deal done, got cleared to close in 14 days. That there are products out there, and we're going to hit on them so you can think about all the different business pieces that you can add to kind of finish this year strong and really kind of put the whole NAR thing in the back mirror, because now you've got this extra strength. Okay. So just the quick growth, again, we're up 300 to 400% right now. I mean, it's crazy, and it's all due to education. That's it, right? We're just letting clients know, referral partners know everything that we can do out there. So the first product point here that we're going to talk about is self-employed borrowers. You guys are all self-employed for the most part, I would assume. So Bank statement loans are the #1 non-QM product in America, and the reason is simple. COVID, right? Think about COVID. 2020, 2021, still was happening 2022. If I'm going to get any type of normal mortgage out there, I'm going to need 1 to 2 years filed tax returns. Those 1 to 2 years filed tax returns, again, you had a great 2023, that's awesome, but you might not file that final tax return until October of 2024. Therefore, if you're trying to buy a home now and it's a jumbo, which let's face it, most of Massachusetts is in that jumbo range, unless someone's got a considerable down payment, right? Or high conforming, where you're going to require, again, 2 years tax returns. We have solutions, right? Where people think because of their tax returns, they've taken advantage because we're in a very highly taxed state that they can't get a loan, right? The reason why you want to pay attention to self-employed borrowers, and the reason why we bring this up is, I know that a lot of you might be part of a referral partner group, B&I, right? You may have a CPA partner, right? Referral partner. If you don't have a CPA and financial planner as a partner, I'm going to tell you the one reason why you should. In every marketplace you cover, whether you are a realtor in JP, but you serve part of Cape Cod, you should have partners in Boston, Metro West, Cape Cod. If you are licensed in New Hampshire, Rhode Island, do the same thing. 10% of a CPA or financial planner's business annually, their clientele, 10% of their clients, buys a home, sells a home, or refinances a home. If you've got someone that's been a CPA for 5 years, they've probably got 50 clients. That's 5 deals. If they've been in the business for 10 years, probably 100 or more clients. That's 10 free deals. You get 10 referral partners, 10 times 10 is 100. That's 100 potential clients if you are top of mind with those referral partners. So having a CPA and financial planner as a realtor at your fingertips not only is a great piece of referral business for you folks, but also, and here's the big one, in this marketplace, you need to show more value. If you can make yourself look bigger by showing a client a list of all the people locally that can help them when they close, or if you can be that referral source, you're just adding value. And that is so big going forward because there's so many agents that don't add value, right? So make sure you're adding these pieces, right? Talk to Andrew and his team about the area you're in, and maybe they can help you. Maybe you have I hope you all have CPAs. If you're not getting referrals from the person that does your taxes, now here's your energy to go call them, right? Same thing, financial planner. Someone's managing your money. First person you should call, okay? We need to ask for this business. And one great thing about we're going to talk about today is you're going to be able to co-market with Andrew, talk to James Ellis, and you're going to be able to co-market and show them about these products you learned today. But self-employed clients, folks, it's going to double in the next 5 years, okay? Taxes are a real deal. There's a reason why people move to Florida and Texas in droves, right? And down south. Taxes are less, right?
We're licensed in both those states, Pete, by the way.
Yep. There we go.
Yep.
So bank statement loans, really simple, okay? A client comes to us, they go to the bank and they say, hey, listen, I'm self-employed. I own a restaurant, right? Okay. Well, you made $360,000 at your restaurant, but you wrote off $359,999.99. You made a penny on paper. Folks, Andrew will smile at this, laugh. We all do as loan officers. This is true stuff. In fact, a lot of companies run at a loss, and they do it on purpose. So when you go to get a mortgage, that's not great, right? So what do people think? Oh, I need to pay cash. I need to call my CPA. So when they have these problems, we want you to think about, if they're told no, let's turn it into a yes, because what we do is we'll not use their tax returns, pay stubs, 1099s, K1s. We won't use any of that. We're going to use their assets, and we're going to use their business bank deposits. right? So if I own a restaurant, I'm going to give you a quick example. I'm going to take 12 months of that restaurant. I'm going to ask that borrower, do you have a CPA? Yes, I do. Great. How long have you owned your restaurant? I've owned my restaurant for 10 years. Great. How much of the restaurant do you own? Do you have any partners? No, I'm 100% owner. So now we're thinking, okay, this is going the right direction. How do you deposit your money? Well, we deposit about $1,000 a day or $30,000 a month, right? 360. So 30,000 times 12 months, that's 360,000, right? So now I'm looking at this as a loan officer and saying, okay, great. What are we looking to buy? Well, let's say I'm going to buy a $500,000 home. I've got 20% to put down. But again, I got turned down by that other bank. I got turned down by these other people because I don't make enough money on my taxes. Well, good thing for you, your realtor referred you over to us, right? What we're going to do is we're going to take those deposits, and we've got multiple different ways to qualify, folks. Our first method is simple. We're going to use 50% of the total deposits divided by 12 months. So let's figure this out. Maybe this client doesn't have a lot of debt. You know, a $400,000 mortgage today in this marketplace, you're probably looking at $3,500 to $4,000 depending on taxes and insurance. Can't believe I'm saying that. But that's the facts right now, right? But again, people want to get in. They want to get a home. They want to start building equity. So I look at that 50% method. I'm talking about, right, so I'm going to use 50% of my 360. It's 180,000. I'm 100% owner. I'll take 12 months. That's 15 grand a month gross. If I look at my debt to income ratio here on this chart, I can go to 50%, right? So I can use $7,500 a month. This person doesn't have a lot of debt per month. I just told you that payment's going to be, you know, mid to high threes for a $400,000 mortgage. I'm good to go. We're qualifying the buyer, pre-approved, we're done. Let's say they're buying $1 million property. We can use a profit and loss printed out by the buyer, having the CPA initial it that they've looked at it. And maybe now my expense factor doesn't go from 50% to, let's say it goes to 15. And now my client's making closer to that 30,000 a month, and maybe I'm at 25 grand a month, but I know that $1 million property with 20% down, that $800,000 mortgage, that's probably going to run $7,500 a month nowadays, right? With taxes and insurance. So if I'm at 20 grand a month, 50% is 10 grand, not a lot of extra debt, I'm good to go. And then if all else fails, we have the CPA write us a letter that Pete's restaurant, Pete is 100% owner. Pete has owned this company for the restaurant for 10 years. And Pete's business is still in place. And Pete's expense factor as of his last tax return was 8%. We put 8% in our calculator, we're done. So folks, these are very simple ways. Over my 22-year career, I can tell you this much. Tax returns have always been a loan officer's angst, right? A lot of local banks can't figure it out. They got to hand a file over to someone else, and that's why pre-approvals take weeks. Here at Cross Country, we do two simple things. We have software. We have AI technology. We read the tax returns. We'll know within hours whether that loan's going to work or not. If that loan doesn't work, Andrew and his team have these options. These are options that we act quick.
And I think like the big thing, Pete, like you kind of said earlier, is when we think of CCM expanded, I know everyone wants to hear about how we're going to save buyer's agent commission, and we're going to get there. Don't worry, we are going to get there. But I think the big thing with CCM expanded portfolio is exceptions, right? You said, what was it, 35 or 40%, Pete?
35 to 40% of our funded volume. Yep.
So if you guys think about this for a sec, there's a whole bunch of transactions here that right now you have your mindset of like, I can't do his loan because his tax return says $1, or I can't do his loan because of XYZ. And what I would say to you is, you know, I had a call yesterday and she said, Andrew, this client may back out of signing a purchase and sale because she owns 19 different businesses. And she thinks that once the lender looks at her tax returns, they're not going to do it. It was an investment property, Pete, and they were putting down 70%. I said, we'll do this as a DSCR loan. It's basically a it's a loan that we base the loan solely on the proposed rental income. And she said, well, Andrew, the property's vacant. I said, we don't need a lease. We go off what the appraiser's opinion of market rent would be. So there's just so many different transactions out there, guys, that we can do. And I think the other thing, Pete, you might have mentioned is these tend to be high loan amounts. They tend to be $1, $2, $3, $4 million transactions because people have complicated financials. They have businesses that lose money. They have, and again, don't think subprime. Don't think, oh, they just foreclosed on a house. They have no money down. They're in bankruptcy. That's not what this is. This is, Andrew, you know what? They don't show a lot of money on their tax return, but I can tell you the guy has a net worth of $10 million. Or,
Right.
I just had one the other day, Pete. Clients moving from Arizona. They don't even have jobs here yet, but they want to buy a house in Massachusetts. And I said, well, send me an asset statement. They had 1.7 million in assets. We do an asset related loan. They're unemployed, guys, and we're going to give them a loan because they have 1.7 million in retirement. So it just very much think outside the box. We always do pre-approvals with soft credit checks. We can assess it right away. Any of you that I've worked with, generally we get a pre-approval letter out within an hour. You're not waiting weeks. It doesn't cost anything. Again, it's a soft credit check. So, but I think here, like, this is a way to gather more market share. So if transactions are down, volume's down, here's a way where you can really fill those valleys with more deals.
Yeah. I mean, again, a lot of people are, there's a lot of self-doubt going in, to this new era with NAR. And what we're trying to do is build you up with these products, right? We want you to know that no matter, what out there, we've got stuff. If someone's got 10% down, we definitely have options, right? And these self-employed borrowers, they're looking for you. And the reason why we spend a little more time on this, everyone, is just because I know a lot of you are in BNIs, networking groups, women's business groups, part of chambers of commerce, but just get local, get with the marquee team, figure this out. And again, CPA and financial advisor referrals, they're sitting there waiting for you. You just have to, put yourself out there. Okay. So self-employed borrowers, I told you that construction company, scenario, that was unbelievable. But again, this is real stuff, and this doesn't take weeks to figure out. Any of you waiting on a pre-approval where your borrower's gone to a bank, there's tons of them out there. Oh, I gave my information over to them weeks ago. It doesn't take weeks, as Andrew said, okay? So sticking with that self-employed here, Andrew just talked about our asset qualifier program. So we're qualifying on assets only. And I really just want to talk real quickly. Checking, savings, obviously, those are cash. Marketable securities are investments, any type of investment stuff that you have out there. We have really gone the distance. We've actually had people invested in private companies that aren't public, where we've been able to use some of those securities, right? Retirement accounts, pension, 401k, IRA, crypto, Bitcoin, Ethereum, you name it, we'll use that, okay? But what we're looking at here is if we could show that borrower, okay, estates, trusts, pensions, by the way, recently sold homes. You've got someone that wants to sell their house, but they're afraid they can't get a mortgage and they don't want to spend their total nest egg of their equity on their home to buy another home. I'm telling you, this happens in all these different areas where people are sitting on real estate where they're like, hey, we're going to walk away with $700,000, but I need to be able to take a mortgage for $350 or $300,000. How do we do this? I don't have a job. I've got a small pension and retirement. We have the answers to that. As long as the people have owned a business, a property, or any of these eligible assets down here at the bottom, right? As long as they've owned it for 6 months or more, we are good to go, right? I've used proof of art. I've used proof of selling watches, cars. As long as someone has owned that asset for 6 months and we can prove it just wasn't put in the account just to qualify for this, we will do the deal. So these are asset-related loans only for people that don't have any income, okay? So great deals there. And as Andrew said, huge success, with clients that are either looking to move back or get a second home, people that retired early, and people without jobs. Then to kind of
Pete,
wrap
it's really
up,
hard to kind of cover all this, right? But one of the big ones that, we always kind of fail to mention is you have a client that owns a home, they want to buy a new home. They don't qualify with both mortgages. We have a way to
Yeah.
just qualify them on the new loan. So we get them
Yep.
qualified, they get a non-contingent pre-approval, they write a letter of explanation that they're either going to list or rent their property within the next 90 days, and we close the loan.
Yep.
Now you have a buy side, you have a listing deal, most likely, if they're going to sell their home, you take 0 deals into 2. That's part of our portfolio as well.
Yep. So, and again, I'm not going to get into all these, but we do a written VOE program, which is a verification of employment. We do a profit and loss program. So if your client doesn't fit the bank statement mold, we'll just get a profit and loss signed off by their accountant. And then we have a 1099 only program, which for a realtor, let's just say last year, I could qualify you off 90% of your gross 1099 that you got from whatever real estate company you work for. And if you are an LLC that gets paid by the real estate company, we do the same way. We just have to prove that your gross receipts, year to date are commensurate with what you made in the past, but with no tax returns, right? So we have a lot of realtors using this across the country, a lot of self-employed borrowers, artists, musicians, Uber drivers. The written VOE program we use a lot with people with funky bonus income or union jobs or shift differentials. And our profit and loss, again, is, there's no bank statements required for that loan, and we're just getting a profit and loss stated by the accountant. Okay.
Non-warrantable condos,
Yep.
guys. We do those all day long. So
yep.
Insurance doesn't work. One guy owns, 50% of the units. We're doing non-warrantable condos every day as well with these. Yep.
So, as far as investment properties go, we have a product called DSCR, right? Investor cash flow. A lot of people are choosing to buy investment properties in today's market. A lot of you are working with real estate investors that, maybe work with one bank or maybe have to go hard money. These are routes to go in lieu of hard money. The biggest difference with us is that the home still has to appraise. So we work with a lot of hard money lenders. You could work with hard money lenders as well. If you know one, introduce them to Andrew and his team, because we have ways to help those hard money lenders and those clients get into a longer term fixed rate mortgage. So I bought the 3-family in Dorchester. I go in, I redo all the apartments. Now I want to rent it out. But my problem is I own 30 other investment properties. On paper, my tax returns aren't great. With this DSCR program, we're based off rent only, okay? We go with 15% down, okay? So that's our max loan to value, a 15% down investment property, 4-family. We'll do that, right? Okay? All the way down to a condo, right? You got to qualify for credit. The DSCR is to qualify. But what is DSCR? DSCR means what is my ratio between my income and my payment. We qualify on the property alone, no other properties. So if I'm buying a 3-family in Dorchester or in Lexington or wherever, and I have complicated tax returns, I don't show enough money on paper, right? I mean, this is the way to go, right? If you've got clients paying cash, you can make offers cash, folks, and you can have clients getting into more properties by not spending their whole nest egg on one property. Okay.
Pete, can we close these in LLC? Can they get gift funds?
Yes. So we can close any of these loans. So 2 big things. There's no PMI on any loan that we offer. Okay. On these loan products. Okay. On non-QM. So speak with Andrew about that. No PMI. It's a straight payment. The second thing is we can close in an LLC, corporation, or trust in any of these products. Any of them, okay? So no problem, no extra cost. The other great thing is maybe your client lives in Lexington and they own a home on Cape Cod or Nantucket or Martha's Vineyard, and the neighbor wants to sell the other house. And you want to buy that house because you want to know your neighbor and you want to maybe rent it out all year round. We also do this with short-term rentals, whether it be a 6-month lease to a travel nurse in Boston or a weekly rental on Cape Cod or Martha's Vineyard or Nantucket or Vermont or New Hampshire, think about all the people that want to do short-term rentals and start building wealth that way. Long-term wealth has always been built off real estate, okay?
Hey,
Some
Pete,
people-
we're down to like 15 minutes to
Yep.
go here, and I
Yeah, I
figure we
gotcha.
probably want to carve out 10 minutes
Yep.
for Q&A.
Yep.
Can we talk quickly about a few of the products we have that free up cash for buyers if in fact the seller's not offering buyer agent commission, just so we make
Yep.
sure we hit that piece?
Yep. So just to finish here with the real estate investors, we don't have a minimum requirement for our DSCR calculation either. And for short-term rentals, we use a third-party software called AirDNA to help appraisers to help us give approvals to come up with rental income. So these are rental income only loans. What is my income at least 75% of the total payment on this home? If so, we can usually do that loan. If someone's putting 30% down or more, there's no ratio required. Okay. So these are great deals for investors. So with our full doc program in all of our non-QM programs, we are rolling out shortly the ability to roll up to 2% of any buyer cost, closing cost, whether that be closing costs, prepaid items, right? Or buyer commission into the loan amount with no additional charge, up to 85%. Okay? So
And then we have the conventional product, Pete, which is up to 85% buy by PMI.
Yep.
So for those clients that wanted to put 20% down, but they have to pay you 2.5%, 3%, whatever the commission agreement is, they can put down, instead of 20, call it 18 or 17%. Their interest rate doesn't change. They don't pay PMI, and we will give them that same loan. So we have conventional option in place. We're putting options with this product as well to roll in buyer agent commission. And then further than that, I think the easiest way I think about it is, how do we free up money for the buyer, right? And so can we give a lender credit? Sure. Can we get a seller credit in certain instances? Perhaps. So we need to get creative and assume worst case, hey, I need to collect my money from the buyer. Where's the buyer going to come up with that extra money? And if we have creative financing solutions to free up those funds, that's what we need to do. So.
Yeah. So, I mean, again, with all these products, with non-QM specific, you'll be able to discern with the buyer that are working with Andrew's team what their ability is going to be 7 days a week, not only, but also to know that if the seller's not offering compensation, you've got options. Okay. And I think that's the most important part of that process that we talked about, is that you need to understand exactly what your buyer's capabilities are. And if you're letting your buyer just go out and get a pre-approval from any willy-nilly bank, you're putting your commission at risk, right? You're putting that buyer's ability to get that home they want at risk.
And I always say, Pete, it's kind of like, if you were going to put a new roof on your house, would you just get one quote and go with it? Or you say to the buyer, hey, I can get you another quote. This is the guy I've worked with for years. It doesn't cost you anything. It's only a soft credit check. Why not get 2 opinions? Just check it out.
Yeah. And again, setting expectations as a real estate agent, you've got to set expectations when you're writing that contract, right? How are you going to know if you're going to meet the dates? How are you going to know if you're going to get paid? How are you going to know, if your buyer's going to be able to, perform, right? And if having those conversations and building that process out, is really, really important. Andrew and his team are happy to work with you to get that process in place. It's simple to his team, right? They do a lot of business. So, there definitely are a ton of options out there to help you get paid. Our goal is to not only help your clients find that home, but also ensure that you get paid, right? I mean, I think that's the biggest thing in this marketplace, and that biggest question mark that you're all, on this call for is, what's out there right now. So we got the buy by PMI, We're going to be able to roll 2% with these loan programs. You know, again, there's a, you know, you can get a seller credit, right? Obviously, seller will offer compensation. You know, the other thing out in that marketplace too is, again, you know, we still got to win this property being competitive, right? So, you know, again, working with a team and having that as part of your value proposition to a buyer and really sticking to it is where we see the biggest differences across the country, right? Is that you don't want to get mowed, right? You do not want to get mowed by your competition. You want to stay in this business. You know, you're going to have to make some of those changes, right?
Well, Pete, thank you. Thank you so much for all this info. I just figured we could leave, you know, maybe a few minutes here. We've got like 8, 9 minutes left. Do you want to kind of open everyone up? James, take them off mute. And I don't know if anyone has questions about any of this or something we didn't cover. Anything else, guys? For anyone on the call, don't be shy, or you can pop it in the chat box.
Hey, I'm not shy. How you
Hi,
doing,
Chris.
Andrew? Just because it happens to be fresh in my mind, as you know, what about VA loan options?
Yeah, so I saw that, you know, maybe a few months back, Chris. I looked into that, and I think the VA stance was, hey, we're not, you know, we don't feel, you know, that we should have to roll in a buyer's agent commission. Was what it was then. Has that changed, Pete? Have you seen any change in guidance from the VA? I heard that they were going to be changing that.
Yeah, there was some change a few weeks ago. In regards to, you know, the income there. We had just put something out, so why don't we follow up with that, with the person asking the question? We can post it to the group.
Okay. Yeah, Chris, we'll circle back with you on that one. I mean, I think when I think about the buyer's agent commission, obviously the biggest challenges is going to be those low down payment loans, you know, those 3% down loans, the VA loans, the FHAs.
Yeah.
You know, we have down payment assistance. I know with conventional, even at 3% down, we have federal loan programs with down payment assistance. We have FHA with down payment assistance. So we can carve out some of that 3.5% down payment to kind of move that towards a buyer's agent commission if needed. But we can definitely, we'll circle back with you on the VA one for sure.
Thank you. And just in terms of the buyer not having the funds is one thing, but sometimes the buyer has the funds, still wants to go with the VA loan, but still is hands are tied, not allowed to pay a buyer, you know, fee. So that would be clarity, and that would be helpful too. Thank you.
Yeah, definitely. So we'll regroup on that VA question. It's a good one, Chris. You always have stumpers for us.
Oh, stop it, Andrew.
Anyone else? Questions? Chat box. You can voice them.
Hi, this
Yeah,
is.
so just
Oh,
real quick, the
I think
VA
Sebastian might have had a question, Pete. Sebastian.
Yeah, this is Sebastian. I'm with Core Banker Realty in Back Bay. How are you?
Hi, Sebastian.
I have two questions. The first one is, how will appraisers look at valuing properties in this new world, right? Because in the past, we had the 5% commission that was, you know, kind of part of the value. Are they gonna now appraise and remove the 2 or 2.5% commission, or how are they gonna transition?
Yeah, I mean, on purchase transactions, right? So appraisers get a copy of the purchase and sale agreement, and I think it's interesting because I find, I mean, you tell me if you feel differently, Pete, but I feel like they're always just trying to kind of hit that dartboard, right? Like if the purchase price is 2 million, it just, you know, magically comes in at 2 million. I mean, you know, sometimes they'll come in a little bit less. It's pretty rare, Sebastian. You and I have done a ton of transactions together in the last 18 months, and I can't recall a low appraisal. I mean, correct me if I'm wrong, but I think that generally, you know, they're looking at market value. They're trying to hit that value on the contract, and I just can't imagine, you know. But like you said, I mean, if the purchase price is lower, let's say, and hey, I'm only paying a seller's agent, I'm not going to pay a buyer's agent. I don't think the property is going to appraise out 2.5%, let's say, as an example, higher than the purchase price. I don't see that. I think they're generally trying to hit the contract price. Would you agree, Pete?
So I think, you know, we're very lucky here in Massachusetts, right, Andrew? Just because, let's face it, you guys are getting listings. they're for the most part selling pretty quickly. Maybe the city's a little bit slower, but the suburbs are, you know, it's depending on where the values are. But I think the greatest thing you can do as a real estate agent, one of the biggest myths that's out there, Andrew and myself and his team and every other person out there at a mortgage company, like, we can give information to an appraiser, but we can't speak to them the way that you can. As a real estate agent, you have the ability to provide what your thought process was with this home, whether it be, hey man, there was a line of 400 cars at this house. We had 32 offers, you know, and you present the demand for a home. You present the comparisons of the home. You put together your professional picture to help get that deal done, right? I mean, I haven't seen a lot of appraisal issues out there, other than for, you know, things that would be normal, not value, right? Maybe something wasn't fixed or something like that. But, you know, I know in talking to loan officers, specifically in Massachusetts a lot, that there was a lot of negotiation going on after the offer is made. A lot of people are doing temporary buy downs, right? A lot of people are, you know, adding things in and changing the price before the purchase and sale, whether it be up or down. So I think, you know, again, as a real estate agent, like with our investor product, we depend on you to come to us with help for the comps of the rent. The rent is the income of those products. So it's really you understanding that marketplace in which you are doing the home and finding those comps and having those solutions in place so you don't get the low appraisal, right? And I think that's the most important thing in today's marketplace to ensure that things are going to come in where you think they should. Now, if someone makes an offer $400,000 over for this incredible home and there's no comps to support it, it's going to be what it is. I mean, we've seen that over the years. I just, to be honest with you, haven't heard of anything here locally being an issue other than potentially some city stuff.
I mean, I look at this whole situation when I think about it, is it's going to really divide, right? It's going to, instead of it being a 70-30, you know, 30% of the agents are doing 70% of the business, I think it shifts to 85-15 or a 90-10, Sebastian. And I think those top agents that have a process like Pete has alluded to and really address these things head on are going to take that much more market share. And the weak ones that aren't prepared or the part-timers are going to fade more, is what I really think.
Sure. Yeah, no, for sure.
You know,
Hey, real quick, Andrew, I just want to go back to that that NAR, the NAR VA deal and answer that question.
oh, great. Okay. Yeah.
So on May 23rd, the VA director, deputy director of policy, Michelle Corden, shared with the Department of Affairs plans to temporarily lift the ban on buyers directly paying. So with VA, the VA borrower, that veteran can't pay for really anything other than putting the down payment on the home. So whether it be a pest inspection or, you know, anything. So they're banned. A VA borrower actually can't pay you as a realtor. Only the seller could, right? So, but it looks like there has been a lot of comments. There's no official announcement, but it looks like a good sign for those of you that have VA buyers, you know, in your stable, that there might be
have
a
to collect the
temporary
commission
lift of
from
the
the
ban
buyer.
for buyers paying real estate representation direct until the agency deems necessary to engage in a formal rulemaking process. So, and again,
Making headway, if nothing
yeah.
else.
So
Yep.
that's all. That's the latest update that we got.
Thank you for that.
Yep.
Anyone else? Any other questions, guys? Trevor, any questions from you? Nope. Trevor's not paying attention. No, we really appreciate everyone hopping on. You know, we just really wanted to share a bunch of info regarding not only the commission, but ways to capture more deals, right? If deal count is down 25-30%, we need to fill the void somewhere. You know, I can tell you that, you know, my team and I are closing, you know, close to 45-50 million a month the last couple of months. And it is using a lot of these unique products that other lenders aren't closing, non-warrantable condos, you know, a lot of the stuff Pete talked about. And I think just generally, if you have deals where there's redeeming qualities to it. Hey, Andrew, this gentleman's unemployed, but you know, he worked at Yahoo and he's got $5 million in stock at Yahoo. Or, you know, hey, he's self-employed, Andrew, but like I know, you know, there's so many examples. You know, Pete's got way more examples than even I do. But
yeah, well, Andrew, Massachusetts, right? One thing that we have seen, and I know Andrew's team has seen, is a surge of relocation again. So if you've got people coming from overseas, no credit score, right, that are coming to work in Boston, I think we've done 4 or 5 of them for you, Andrew.
yeah.
But, you know, that's starting to pick up. Companies are starting to hire again, and people are moving, you know, to Boston in the suburbs or Massachusetts in suburbs.
Pete, we just did one. I love
Yeah.
these examples, but we just had a client buy a non-warrantable condo in Concord, Massachusetts. The insurance was a mess. It was totally non-warrantable. He had no credit score whatsoever. He had no social security number, guys. No social security number. And he was moving from the UK here, but again, no social, no credit. He did have a visa. He did have it because he was getting transferred by a company, but again, no social, no credit, non-warrantable condo, and we closed that deal. Tell me any other lender, anyone that's ever done a deal for a client with no social on a non-warrantable condo. You'd be pressed to have someone close that loan. Again, it was a $600,000 deal, but I mean, if you could do 5 more of those a year, or even 3 more of those a year, that could make or break your year. You know, so you really got to think outside the box on this stuff. And you know, any detail you can share, like if you can say, hey, Andrew, like he has a great job, he's coming from a great company, but he's got no credit, no social, no nothing. But you know, and you share that with me in an email, within seconds, I can go to one of Pete's assistants and say, hey, do we have a deal here? They reach out to our capital partners, right, Pete? And they say, hey, is this something we'd consider? And, you know, again, we're talking half hour to an hour, maybe 2 hours. We're not talking weeks on end that we're holding someone's tax return. So just try to, you know, be open-minded and not lose that business.
Andrew, can I ask one more question? I don't know if this is off topic. Just tell me if it is and shut me down. But a lot of what we're doing here is trying to figure out ways, be creative, and how to, you know, close deals. I want to know a little bit about the risk to buyers who don't follow through with the promises. So like as an example, you said earlier, in order to qualify for a loan, they would need to rent the property within 90 days of closing, but then they don't, let's say. Like what happens? Is the bank proactive about that? Does it depend if they just miss a payment? Does the bank call the loan? I mean,
Pete, I'm going to defer to you on that one.
Yeah, so our buy now, sell later program that Andrew's been promoting very well for the last couple of years, actually, it's really all about, you know, there's a letter, dear Andrew, you know, I am planning on I'm planning on selling my home within the next 90 days with, you know, X agent, right? Thank you. We're looking at the equity piece on that home. We're looking at a lot of different factors that go into that decision of waiving what the total current payment is on there. And the greatest thing is, folks, we're doing bridge loans on those deals. We're doing quick home equity lines on those deals. We're sucking out equity on those properties so people have the money in the reserves to put on there. The key point I just said is these are reserve heavy deals. So
I would say this to you, Chris. There's a lot of risk.
Doing it.
There's a lot of risk mitigation. So in other words, we're not doing this for someone that has no equity in their home and no reserves, and they're going to foreclose on the prior property. We're qualifying the loan in a way where they have enough skin in the game, both between reserve savings, equity, and the departing residents, that we can accept the risk. So are we going to knock on their door day 91 and say, where's your lease agreement or where's your listing agreement? I don't know, probably not, Pete, but again,
892.
I mean, you know, this could go down a huge rabbit hole, right? Of those clients that
Sure,
say,
but sometimes clients ask about
live in that
this.
3-family, Andrew, right? And again, we don't want to go there, but yeah, I think we mitigate our risk position with those loans, is what I would say.
There's no lien on the prior property, right? That we're doing, unless it's a bridge, you know, again, unless we're doing some sort of bridge loan or home equity line product, there's no lien on that prior property. My concern is the payment on the new property, right?
Right. So if the payments are being made, it's kind of not a problem, because I wasn't thinking as much risk to you, Andrew, or in CCM as much as risk to the buyer? If the buyer doesn't perform because they wrote a letter that said, I'm going to rent it in 90 days, can they
So
write
let me
another
ask you
letter
this
that
question.
says,
So the
oh, I'm
buyer
going to
has
do
a,
it in 120 days instead?
the buyer has a previous property, Chris, and they're paying $5,000 a month on that mortgage. And you're telling me after 90 days, they're not going to list it or rent it. They're just going to keep paying $5,000 a month.
I mean, if they make their payments, is everything fine? Or is there an issue with the fact that they said they would rent it and then they didn't? They didn't. As long as they're performing what they're supposed to,
I just think a financially savvy borrower wouldn't just keep paying $5,000 a month, is what I would say to
I
you.
think you're right.
Yeah.
I'm sometimes asked the question, what will happen if I don't do the thing that I said in the letter? And
Yep.
There's no, this is,
And what I would answer that is I'd probably say, well, what is your plan then?
yeah.
Oh, I'm just gonna keep paying $5,000 in perpetuity. Oh, okay. So you're gonna keep it as a vacation home? Yeah, okay, well, run it by us. Hey, Pete, is it okay if they keep it as a vacation home? I don't know. He'd probably be okay with that. But that would be my question. I say, hey, if I don't rent it or sell it, like I said in this letter, what's my liability? I'd say, well, what's your plan?
it
Yeah.
depends is the answer. I get it.
It's Chris, it's a good faith letter, right? It's a good faith letter. There's no documentation in the file, or the closing documents that say that you have to do anything on the prior property.
Okay, that's helpful too. Thank you.
So, but again, like we don't, the one thing we don't want to do is folks, we want you to get that commission of selling that other home. And we're hoping that's the plan and that people aren't trying to, pull the wool over our eyes. Right. So, have we caught people trying to already market their property and rent and this and that? There's due diligence on the property that they're selling. We're getting an appraisal drive-by. We're an appraiser's looking up that property. If it's listed for rent before, we're going to know it, right? We're going to know they're not going to sell it. They're not going to get approved. So, just make sure that people have true intentions is what we ask. And that's how we're taking that loan product. Okay.
Thank you.
All right.
Thanks, Chris.
Someone asked a question real quick, Andrew, on non-warrantable condos. So a non-warrantable condo is a condo that doesn't meet Fannie and Freddie condo guidelines. Currently across America, there's been some insurance issues. Simply put, we had a large hurricane in Florida, little bit of a big deal. It affected a lot of condo complexes and it affected insurance nationwide. So if you think about it in layman's terms to yourself, I've got a home. I've never had a claim on my home, but Progressive just sent me my most recent quote, and the quote went from $1,500 a year to $3,000 a year. And then the Progressive agent says to you, hey, listen, if you increase your deductible from 5 to 10%, I can keep you at $1,500. What do you think? Oh, well, I'm going to keep my costs the same. My deductible, oh, I've never had a claim. What are you going to pick? You're going to pick the 10% deductible, probably almost every single time, right? So that's what's happening in the condo world. Fannie and Freddie, 5% max insurance deductible. Condos across America are getting policies that are 50, 75, 100% more than their previous policy due to what's going on in America and what happened in Florida.
What I say generally, Pete, is like if you're listing a condo or you have a buyer looking into a condo, request a certificate of insurance on day one. Email me the certificate of insurance and I can very quickly email you what it is because I think if upfront we say to the client, hey, this needs a portfolio loan and here's why, and your payment's going to be an extra $200 a month, and we face it head on and they say, you know what, Andrew, I love the unit. I don't care about the $200 a month. I still want to buy it. We're fine. If they hear about that 3-4 months after the accepted, executed purchase and sale agreement, it's a week before closing, and we say your payment's going up $200, that generally doesn't go over too well. So good practice is just to get the master certificate of insurance up front, buyer's agent or seller's agent. You can email it to me. I can do the math in 2 minutes. I can explain to you how I did the math. So in the future, you're educated on what that guideline is. But again, I would just say, like to Pete's point, is if you haven't run into issues on condos lately, you will.
Yeah, and for the person that asked that question, we do all occupancy types for non-warrantable condos: investment, second home, and primary. Someone also had a question about crypto. Yeah, so we'd use crypto to qualify for our asset qualifier. We'll use it for reserves. Obviously, we've got a value calculation we'll use for reserves for people that need that. And you know, it is an assumable currency that we'll use to help people qualify.
Any other questions, guys? I do want to thank everyone for coming, and you know, Pete and I are always available, you know, offline as well. So if you think of more questions later, we can address those personally for you. But you know, again, just thank you everyone for your time. I know this is a very, very busy week to be jumping on a call like this. So again, thanks for that, and thank you, Pete. Thank you,
No
David.
problem. Have a
Any
great
other
4th of
parting
July.
questions, guys?
This was
All
great.
right.
Thank you. Super helpful. Took lots of notes. Unfortunately, I have about 50 more questions for Andrew, but I'll do that offline.
Thank you, Chris, for sparing me.
We
It's time for a
appreciate you,
lunch.
Chris. Thank you so much, everyone, and we'll talk to you, I'm sure, very soon. Have a great
All right.
fourth.
Thank you. You
Bye-bye.
too.
Bye-bye.